Welcome back to my channel where I'm all about putting your money to work through dividend investing. Today, I'm going to show you 6 investments that get you fat and consistent streams of income. This video is all about high yield dividend ETFs that pay you monthly. And make sure you stick around to the end because I'm going to go through some scenarios that show you how much money you could be making in income if you only invested in these 6 funds. And hint, you don't necessarily need millions of dollars to retire. It's possible it's a lot less than you think. And if you're new here, consider hitting that subscribe button so you can learn more about dividend investing. So why high yield dividend ETFs? Maybe you're tired of relying solely on your 9-to-5 paycheck and you'd love to have a portfolio that paid you 6 figures in dividends each year. But it can be really tough to get that high of an amount solely through dividends. But these funds can help you get there faster. I handpicked 6 high yield dividend ETFs that can turbocharge your retirement strategy. And they all pay out every month so you know when your paychecks are coming in. But remember, while high yield dividend funds may look like a shortcut to retiring early, they still have their own risk. And for this video, I picked 2 funds from 3 different fund managers. 2 from YieldMax, 2 from Global X, and 2 from JP Morgan to make sure that we had diversity across fund managers. And all 6 of these funds utilize stock options in some form or another to generate income. I've talked a lot about selling covered calls and synthetic covered calls in my past videos, so I won't get too in detail about exactly how those strategies work. Just know that these ETFs are trading financial derivatives to make a profit. Let's jump right in. All right, so first up, we have XYLD, which is the Global X S&P 500 covered call ETF. This fund mimics the S&P 500 and it sells covered calls against its stocks. So it's like owning the market, but with a covered call strategy. All the income that it gets from selling calls gets distributed out to shareholders as dividends, and it pays a dividend every month. So let's look at the detailed quote here. Current share price is $41.16. Got a net expense ratio of 0.60%. It's got 2.97 billion in net assets, and it currently pays a 10.97% dividend yield. And if we look at the past year price history on the stock, you can see that it's been for the most part, it's been flat. Around October of last year to right now, it's pretty flat. I mean, it's gone from a low of 37.50 to 40.73. And this is all during a time where the S&P 500 has had pretty good gains. So in this case, you've probably made a little bit less than the S&P 500, but you've gotten those high dividends. So this is a stock where you're not really going to get the share price appreciation, but you will get high dividend payments. Let's take a look at the dividend payment history. This one, you get paid a dividend every single month. So usually around the 23rd, 21st, the 20th. So in the 3rd week of the month, you can expect a payment from this. The dividend ranges from about 40 cents a share. The most recent one was pretty low at 28 cents a share. So it does fluctuate quite a bit. So if you bought around $40, I would expect a little less than 1% each month. And if we look at the holdings, it pretty much mimics the S&P 500. So you've got Apple up top at 7.65%, then Microsoft, Amazon, Nvidia, Google, Tesla, Meta, Google, Berkshire Hathaway B shares. So it's really just like owning the S&P 500, but with covered calls. All right, next up is SDIV, the Global X Super Dividend ETF. So this one isn't necessarily a covered call fund, but what it is a global fund that invests in high yield global stocks. So stocks that pay a high yield dividend on different exchanges across the world. If we look at the detailed quote, it's got a closing price of $22.36. The net expense ratio of this one is 0.58%, not too bad. The net assets are 802.46 million, so it's a lot smaller than the last fund we looked at. And the current estimated distribution rate is 12.96%, so it's almost at a 13% estimated distribution yield. And if we take a look at the 1-year price chart, you can see that it's fluctuated quite a bit, and it's kind of been bouncing off this low of around $21, $22, and bounces back up $27, but it's definitely been on the decline over the past year. And, you know, these global market high dividend stocks haven't really been performing well. So you're getting a high dividend, but the stocks really aren't performing that well. So you need to be careful if you're investing too much money in this fund. And if we look at the distribution history, so this one, like the other one, pays a dividend every month. It's usually around the first week, so the 3rd, the 5th, 3rd, the 5th, the 6th. So you're getting it in that first week of the month, and it's usually around 25 to 21 cents. So it looks like they're paying a consistent dividend. So they're trying to pay about the same amount, but they've recently dropped it from 28 cents, 25 cents, 23 cents, 21 cents. So you need to watch this one unless you're, if you look at the companies in this fund and decide that you are bearish on them, then this is something that you might want to buy now since it is down and they did recently cut the dividend. And if you look at the top holdings in the fund, so a lot of these are global companies that I don't really know about, but ABR, Arbor Realty Trust, that's a commercial real estate REIT in the United States. They have like a 12% dividend, but the price of that has been getting smashed lately, along with other like commercial real estate funds. So I'm not too sure about a lot of these. RC, SLG, it's just global high yield stocks. So it's just a collection of stocks. They're not doing covered calls or anything on this one. All right, next up is JEPI, and this is the JP Morgan Equity Premium Income ETF. So this fund doesn't necessarily track an index like the S&P 500, but it does invest in like large cap United States companies like Amazon, Adobe, so big companies like that. And what they do is they sell covered calls against their holdings. It's like a broad market fund, but they pick the stocks in it and pick the covered calls. So if you look at the detailed quote, it's got a closing price of $55.66. The net expense ratio is 0.35%. So this one's a lot lower than the Global X funds. The JP Morgan funds have about half of the expense ratio. The net assets are $28.95 billion. So this is a huge fund, right? It's so much bigger than the Global X funds. I think this is probably one of the biggest covered call ETFs on the market right now. And it's got an estimated distribution yield of 10%. And if we look at the past 1 year stock price chart, it's dropped down to $50 and bounced up to around $57. So pretty much over the past year, it's been stuck in this range between $50 and almost like $55. So it's a pretty flat stock, but you're really relying on the income. So that 10% dividend yield, you're waiting for those dividend payments each month, and that's how you're going to make money. You're not going to get much appreciation because this fund does sell covered calls, which limits your upside on the shares. If we look at the distribution history, you can see that this fund pays a monthly dividend right around sometimes the 1st, the 2nd, the 3rd. So you're getting those payments on the 1st of the month, if not, then like the 2nd or the 3rd. The only issue is the payments aren't extremely consistent. So if you look in December of 2022, you were at 60 cents, 61 cents, and they've since come down to 41 cents, 44 cents, 35 cents, 29 cents. So you're getting less than half of the payment that you were a year ago. So you need to be prepared and things like that. So essentially, as the market goes up, the share price will appreciate, dividend payments will be lower. Watched an interview with the fund manager of JEPI, and he said they're aiming for about an 8% per year gains between both dividends and share price appreciation. And then lastly, if we jump over the holdings, like I was saying, Adobe, Amazon, Microsoft, Comcast, MasterCard, Intuit, Pepsi, Visa. So there's a lot of big United States companies, mostly tech type of companies. So you're getting, some pretty solid holdings. It's not like the last one where they're looking for high dividend yield stocks. This is, more consistent stocks that most people would hold. Is probably pretty in line with the S&P 500. All right, next up is JEPQ, the JP Morgan NASDAQ Equity Premium Income ETF. So this behaves a little bit more like the first fund we went over, XYLD, but it's JP Morgan's version of that on the NASDAQ 100. It invests in companies, it tracks and mimics the NASDAQ 100 stocks, but sells covered calls against those holdings. So it is an income generating fund that has a little bit more upside to it because NASDAQ is a little bit more volatile and the payments should be a little bit higher because they sell call options and those are priced higher on NASDAQ stocks. Let's look at the detailed quote. So it's got a previous close of $48.32. The net expense ratio is 0.35%, so pretty decently low. It's not as low as like Vanguard funds where it's like 0.5%, but considering this is an actively managed fund, that's decently low. Got net assets of $4.75 billion, so a pretty large fund. These JP Morgan ones are pretty big, and it's got an estimated distribution yield of 9.08%. Let's hop over to the 1 year chart. You can see this one does fluctuate a little bit more, but it's still stuck between that $40 and $50 range. So it hit a low of $40 in October and January of this year, and now it's grown. So you've had some 20 to 25% share price appreciation if you bought at the beginning of this year, and you're also enjoying dividends all along the way every month. Let's jump over to the distribution history. So you can see in Q4 of 2022 you had the highest amount of dividends, right? That's your 3 dividends combined, because this one pays every month. Again, this one pays on the 1st, the 2nd, or the 3rd. So it's you're getting those payments at the beginning of the week, right at the beginning of the month, which is nice. Some people like that. But there is quite a bit of fluctuation in the dividend payments as well for this one, because it's based on how much money they make from selling covered calls. So you can see, like in November of last year, 68 cents, 54 cents the next month. And then currently it's around 36 cents have been the past 3 payments. So your payments also have been kind of cut in half. So if you're relying on this, you need to have a lot more income than you actually require. I'd say about half, because these estimated yields are pretty hard. So you need to look at the range and be prepared for a change in the amount of money that you're getting. And if we go over to the holdings, and all right, next up is OARK, which is the Yield Max Innovation Option Income Strategy ETF. This is the first of 2 Yield Max funds that I'm going to be showing you. All these ETFs still really just have these same 5 or 6 companies in them. All right, next up is OARK, which is the Yield Max Innovation Option Income Strategy ETF. This is the first of 2 Yield Max funds that I'm going to be showing you. And how these Yield Max funds work is pretty similar to how the other funds work, but instead these do synthetic covered calls versus regular covered calls. So instead of owning the shares outright, they own call options, long-dated call options on these shares, and sell other call options against those call options. They also sell put options too. But these are some of the highest yielding dividend ETFs that you can find on the market right now. So they're getting really popular among dividend investors. So let's jump into the detailed quote. The last closing price was $14.83. The net expense ratio is 0.99%. So these Yield Max funds have the highest expense ratio that we've seen so far among a lot of these income ETFs. The net assets is 57.36 million. So it's a pretty big fund, but still not nearly anywhere near the tens of millions of dollars that's in the JP Morgan funds. But here's the big thing, and this is why a lot of people love these funds. The estimated distribution yield is 55.33%. And if we take a look at the 1-year chart, you can see it doesn't even go all the way back to a year. So it's about 9 months old right now. And it has come down quite a bit from its highs around like $22, $23. And it's sitting around $14, which is, pretty close to the historical low, which was, right around $14. It does seem like now might be a good time to buy, but the problem with ARK in general is that a lot of the companies in it are not profitable companies. I think something like 3 or 4%, I can't remember exactly, of the companies in the ARKK fund, which is what this is based off of, are actually profitable companies, right? Tesla's profitable, but a lot of them are like tech innovation companies that don't even turn a profit yet. And I don't really like investing in unprofitable companies, but there's a lot of volatility, which means the options premiums are high. So if you're an options seller, you can make a lot of money, but you need to be careful because there's a lot of volatility, which means this stock price is going to fluctuate quite a bit, which also means the dividend payments are going to fluctuate quite a bit. So let's move on to the historical distributions. So you can see it fluctuates quite a bit, like I was just saying. So you've got a high in February of this year at $1.09. Then you've got a low of about 36 cents in May, so a third. So you lost 66% of your income there if this is all that you're holding. So this is why this shouldn't be too big of a holding in your portfolio, because it can fluctuate quite a bit. The most recent distribution was 68 cents, and it usually pays, it looks around the 8th, the 6th, the 5th, the 7th. So about 1 week into each month, you can expect, those dividends to be coming in. And if we look at the composition of the fund, we've got quite a bit of holdings in U.S. Treasury bonds. So they actually only trade with a small amount of money that they receive. So they've got about 65 million in U.S. Treasury bonds. So you can see they're leveraged a little bit because their net assets are 57 million. And they also hold various other call options. So they've got some long call options and they've got some short call options as well. So some long dated call options and that they're long, and some short dated call options that they're short. So they buy long options and sell short options to profit from that difference in premium that you get from short-term options. All right, next up, my final monthly dividend high yield ETF is TSLY, Yield Max Tesla Option Income Strategy ETF. This is the same as the OARK fund that I just told you about, but they do a synthetic covered call strategy on Tesla. So Tesla has some of the highest premiums of any like big company in the market. Tesla is one of the higher ones, and so is Coinbase, and YieldMax just released a Coinbase fund that uses synthetic covered calls too. It's not in this video, but they did just come out with it this month, like literally a week ago. But if we jump into the detailed quote of TSLY, it's got a closing price of $14.81, a net expense ratio of 0.99%, which is in line with the other yield max funds, but it's still decently high. The net assets are 348 million. So this is the largest of the yield max funds. And that's because it has the highest estimated distribution yield at 67.27%. First, let's look at the chart, because while that 67% dividend yield is certainly enticing, stock is going to fluctuate in price quite a bit. So since its release in December 2022 of last year, it's been out about 9 months. You can see it's gone from a high around $22 down to a low just above like $13. So in order to get these high dividends, you've got to be able to withstand these price fluctuations. So it's currently dropped from like a high around $18 to a low around $14.50. So if you think like it's low right now, now might be a good time to buy. Or you could wait and see if it gets down to around that like $13 level. Let's hop over to the distributions, which is why everyone loves this ETF. You can see they fluctuate from about $1.06, and this is every month, right, to a low of about 44 cents. So you're getting paid the first week of every month. And in my opinion, you could reasonably expect about 75 cents for each share that you own. So if you own 1,000 shares, say if you went by 1,000 shares right now, it costs you about almost $15,000. You would get almost, $750, $800 a month in dividend income. That is quite unbelievable. There's really nowhere else you can get that type of return for not having to do anything. I mean, that's completely passive income. If we jump over to the holdings, so TSLY, a lot of this is in U.S. Treasury bonds. So we've got a 55%er and a 54.97%er. So that's also got about 14 million in cash. And then the rest is all Tesla options holdings. So they don't actually own Tesla stock, but they own long dated Tesla call options. They're short Tesla call options. They're also short some Tesla put options. So it's a mostly bullish, really synthetic covered call option strategy. I just put together this quick and dirty spreadsheet to see if you, had some money and you invested it evenly into these stocks, how much in annual and monthly income could you reasonably expect? So I started with $150,000. So let's say you sold your house or something, you got 150 grand, you put it in to these 6 funds, you split it evenly, 25 grand into each fund. How much could you expect in annual income? And that's about $41,400. That's not a small sum of money. Monthly, we're looking at about $3,450, right? You'd be pretty stressed, I think, if you tried to do this, because as you could see, the prices of the distributions fluctuate quite a bit, along with the initial capital that you have in there would also fluctuate quite a bit. But let's crank that up a little bit. So what if you had 50 grand in each one of these 6 accounts? So $300,000, you'd be looking at more like $82,000 a year. Wow. That is a full-time salary for most Americans. Monthly, you're looking at $6,900, almost $7,000 a month in dividend income from only $300,000 invested, split between these 6 funds. And just for fun, let's bump this thing up a little bit more. So say you had 600 grand. So you put 100 grand into each one of these funds. You'd be looking at about $165,000 or $13,000 a month in dividend income, right? And you're getting paid every month. $600,000 in retirement isn't, an unbelievable amount of money. A lot of people think to retire off dividends, you need something like $2 million, even $3 or $4 million to live, a decent life. But if you invest in some of these high yield income funds, you can earn quite a bit more. I mean, 600 grand, you're looking at 165 grand a year, 13 grand a month. You probably won't even spend that much money. Now, this is risky stuff. So, get ready to ride the waves, but there's a lot of money to be made in these. And let's crank it up one more time. So say you have 1.2 million, which is what most Americans think they need to retire. So 200 grand into each one of these 6 that I just showed you, you'd be looking at about $331,000 in annual dividend income, or about $27,600 a month, right? This is going to fluctuate quite a bit, but that's an unreal number. I mean, a lot of people can't even imagine getting $27,000 a month. You'd have to put over $1 million in here. If you're thinking, oh, I need $1 million to retire off dividends, even over $1 million, and I'll be making a measly, 60 grand a year. That's not exactly true. You can get there a lot faster and potentially have a lot more gains. Thanks for watching this video, everyone. I really appreciate it. I enjoyed making it. And my financial advice disclaimer, this is not financial advice. I'm not a financial advisor. Please do your own research. I'm showing you what I learned in my scenarios, but in no way am I saying that you should go out and put $1 million into any of these stocks. They are risky. High yield dividend funds are risky. Have a good day.